Happy New Year, Wayne.
Happy New Year, Jack.
Thank you. I wanted to ask you a question that I got from investors, one of which is, what's your overview of 2022 and what do you see happening in 2023?
Yeah, great question. Nice way to start 23. Let's go this way, which is 22 is not a year that any investor would want to relive, largely because it was a year where we saw declines in both the equity and the bond markets, and that seldomly ever happens.
And what caused that?
It's difficult to say. It's what we would think of as a poly crisis. But if you had to think about one thing to think about, it would be the withdrawal of liquidity from markets.
Right, and what caused the liquidity reduction?
It's entirely a policy issue, right? So the central banks are withdrawing liquidity, and if we think about 22, at the start of 22, the outlook was inflation is transitory and the world was peaceful. By the end of 22, the world's not peaceful and inflation is thought to be a problem. So the central banks have reacted by withdrawing liquidity through QT as well as raising rates.
And how is that going to affect growth?
Well, I think fairly negatively. But you take all these factors together in a high conflict environment, and you can say that we entered 2023 with the following things: persistent inflation. Right? So even though I think we will see month-on-month inflation decline, our year-on-year inflation will still be persistent. In that environment, we can expect interest rates to remain elevated. With interest rates elevated and the continuation of quantitative tightening, you can expect to see a decline in liquidity. You take those factors together and the way that people react to it, you'll see an increase in volatility and a lower growth number, both in GDP as well as corporate earnings.
So in that type of environment, how will Max Alpha respond?
I think that's an environment that favors experience and investors that have a structured, sort of transparent approach to investing. We have a methodology, a systematic methodology of understanding return per unit of risk. We have been advocates of looking for the mega trend, things which persist in terms of creating return for our investors. So we'll continue with identifying our risks and returns systematically, and we'll continue with trends. The one thing that I would say is that we live in a higher yield environment, and whilst that makes borrowings for investors more difficult, it allows us to de-risk and defend the portfolio.
Okay. And how would investors get more information about?
Well, it's January. We expect that most of our investors will be back by the end of January. We're holding an Outlook event in February, and we'd love you to come.
Excellent. Thank you, Wayne.
Thanks, Jack.